London stocks were set for a firmer open on Friday as investors took some comfort from solid Amazon earnings and looked ahead to the latest US GDP reading. The FTSE 100 was called to open 19 points higher at 7,682. London Capital Group analyst Jasper Lawler said, cementing the seesaw action in tech stocks across this week. Amazon reported through-the-roof earnings, double expectations at $5.07 per share versus EXP $2.57, sending its shares 3% higher in after-hours trading. Whilst revenue experienced a slight miss, the phenomenal profits thanks to its high-earning cloud business and advertising sent a wave of relief through the markets after Facebook's shocker just 24 hours earlier. Even Nasdaq futures were looking brighter. There are no major UK data releases due, but second quarter US GDP figures are at 13:30 BST. Lawler said a strong GDP figure will support expectations that the Fed will look to raise rates 4 times across the year. Whilst their rates hikes are fully priced in, investors remain unsure about the fourth, which is only 65% priced in. A solid GDP print boosting rate hike hopes could see the dollar extend gains from the previous session and push towards $95.50. Meanwhile, a surprise to the downside could see the dollar target $93.80. In UK corporate news, BP said it had agreed to buy BHP's US shale assets for $10.5 billion. BP said it would pay the $10.5 billion in 2 installments, with $5.25 billion paid once the deal is completed and the rest in 6 cash payments over 6 months. BT Group updated the market on its trading for the first quarter to the 30th of June on Friday, with underlying revenue down 2% as regulated price reductions in Openreach and declines in its enterprise businesses offset growth in the company's consumer business. The telecoms giant said adjusted EBITDA was up 1% to £1.8 billion, which was primarily driven by stronger handset margins in its consumer business, and restructuring-related cost savings. Rightmove posted a jump in first-half revenue and operating profit as it lifted its interim dividend and it was confident of delivering on its full-year expectations. In the 6 months to the 30th of June, revenue was 10% higher at £131.1 million, while operating profit rose 12% to £98.2 million and the group upped its dividend by 14% to 25p a share.